Here we have Caterpillar. It is currently sitting at $688.65 here on Sunday, March 22nd, 2026. Over the past 5 days, it's down 3.74%. Over the past month, it's down 9.99%. Over the past 6 months, it's up 44.22%. Year to date, it's up 18.85%. On a 1-year chart, it's up 99.28%. On a 5-year chart, it's up 196.68%. And on a maximum chart, going back to 1986, October 31st, they're up 21,045.34%. Pretty sweet. Caterpillar has a dividend of 0.89%, a quarterly dividend of $1.51, PE ratio of 36.2, 72-week or a 52-week high of $789.81, a 52-week low of $267.30, with an EPS of $18.81. They've got about 118,000 employees and 465.29 million shares outstanding. We all know Caterpillar. It's an American construction, mining, and other engineering equipment manufacturer. The company is the world's largest manufacturer of construction equipment. In 2018, Caterpillar was ranked number 73 on the Fortune 500 list and number 265 on the global Fortune 500 list. Caterpillar stock is a component of the Dow Jones Industrial Average. Caterpillar Incorporated traces its origins to the 1925 merger of the Holt Manufacturing Company and the C.L. Best Tractor Company, creating a new entity, California-based Caterpillar Tractor Company. In 1986, the company reorganized itself as a Delaware corporation under the current name Caterpillar Incorporated. It announced in January 2017 that over the course of the year, it would relocate its headquarters from Peoria, Illinois to Deerfield, Illinois, scrapping plans from 2015 of building an $800 million new headquarters complex in downtown Peoria. Its headquarters are located in Irving, Texas since 2022. The company also licenses and markets a line of clothing and workwear boots under its Cat Caterpillar name. Additionally, the company licensed the Cat phone brand of toughened mobile phones and rugged smartphones from 2012 to 2024. That's according to Wikipedia on Google Finance here. So, perspectives from across the web. Caterpillar declined approximately 10% recently despite a record-breaking 2025 performance, profit-taking, insider selling, and concerns regarding $2.6 billion in projected 2026 tariff costs drove this pullback. However, analysts project a recovery for the next quarter, supported by a record $51 billion backlog and sustained demand from AI-driven data center construction. Sure, y'all need somebody to build them data centers. The bullish view. Record backlog and revenue growth. Caterpillar ended 2025 with a record $51 billion backlog, providing high visibility in 2026 revenues. Management expects sales growth at the top end of its 5 to 7% long-term target, fueled by strong volume across all primary segments and roughly 2% favorable price realization. AI data center and infrastructure boom. The company is increasingly viewed as an AI play due to surging demand for its power products in data center construction. Additionally, long-term benefits from the U.S. Infrastructure Investment and Jobs Act continue to support robust demand for heavy machinery and power generation equipment. A recent analyst upgrades the price targets. Major firms including Jefferies, Wells Fargo, and Oppenheimer recently raised their price targets, with some reaching as high as $870. These revisions reflect optimism regarding 2026 earnings momentum and the company's ability to maintain high margins despite broader industrial volatility. The bearish view. Significant tariff and margin pressure. Caterpillar has warned of substantial tariff headwinds estimated at $2.6 billion for 2026, with approximately $800 million expected to impact the first quarter alone. These costs, alongside rising capacity investments, could compress operating margins despite strong top-line growth. Valuation and insider selling concerns. The stock's PE ratio of approximately 30 to 37x sits significantly above its historical average, leading some analysts to label it overvalued. Market sentiment was further rattled in March 2026 by multi-million-dollar stock sales from top executives, including the CEO. So, on January 29th, 2026, they beat by 9.51%. They were estimated to get $4.71. They got $5.16. They also beat on revenue. They were expected to get $17.76 billion. They got $19.13 billion, beating by 7.74%. Okay. Now, I like to go back and see when the last time that they missed. And we've got some misses here. So, in Q2 2025, they missed revenue. No, EPS, sorry. They missed EPS by 3.73%, and then in Q1 of 2025, they also missed by 2.19%. And then go back to Q3 of 2024, and they missed by 3.44%. And if you guys are watching, you can see this is a little, like a graphic here. This is all on Google Finance, if anybody ever wants to look at this stuff themselves. So here we've got the revenue misses go back to Q1 2025, and you've got a 2.37% miss. And then in Q4 and Q3. Q4 they've missed by 2.35%, and then in Q3 they missed by 0.99%. And so, and then you go back to Q1 of 2024, and they missed by 1.21%. Q4 of 2023, they missed by 0.34%. So, you guys are some little missers. Your cousin Dustin does not like to see that. But, you know, still pretty sweet. Caterpillar, still pretty cool. So, let's read an article about Caterpillar. Let's try this. Simply Wall Street. This is from 2 days ago. So, before you even read the article, they've got a little graphic here. This is kind of cool. Provides construction and mining equipment off-highway diesel and natural gas engines, industrial gas turbines, and diesel electric locomotives in the United States and internationally. Excellent balance sheet, average dividend payer is what this says. So, here we go. This is Simply Wall Street, March 19th, 2026. So this is a few days ago. After recent 10% share price decline, Caterpillar, CAT, is back in focus after a roughly 10% decline over the past month. Even though its return over the past 3 months remains positive, that gap is prompting fresh attention to its recent performance. The recent 10% one-month share price decline sits against a still strong backdrop with a 19.5% 3-month share price return, 15.1% year-to-date share price return, and a very large 5-year total shareholder return. Taken together, these figures point to momentum that has cooled in the short term but remains strong over longer periods. If this kind of move has you thinking about where else capital equipment and infrastructure demand might create opportunities, it could be worth scanning this. No. with Caterpillar trading at 688.65, sitting close to analyst targets and showing only a modest implied discount. The key question is simple. Are you looking at an undervalued industrial heavyweight or a stock where future growth is already priced in? According to Bailey, the most followed narrative pegs Caterpillar's fair value at $319.93, which sits well below the recent $688.65 share price, creating a wide valuation gap built on detailed long-term revenue and margin assumptions. Caterpillar operates in a mature and highly competitive market with limited opportunities for significant growth. Caterpillar is already the largest manufacturer in the construction industry when it comes to heavy machinery sales, but with competition heating up, the likelihood here is that Caterpillar loses market share to other companies in the segment as they may be already reaching saturation. The global construction industry is set to reach $334 billion by 2030, representative of an equivalent growth of 7.9% annual growth and up from $183.4 billion in 2022. But this growth may not even be enough to support the market's current growth expectations of Caterpillar. To put it simply, even if Caterpillar wasn't to lose market share to competitors, the anticipated growth of the construction industry may not be enough to support the current valuation for the company. Curious how Bailey connects construction, mining, energy, and financing into one valuation story, and why a future earnings multiple does so much of the heavy lifting. The key assumptions pull together segment-level revenue pass, stable margins, and a projected earnings per share figure that all roll into a single target price. If you want to see exactly which growth paths and profit value profile are priced in, the full narrative lays out every step behind that $319.93 fair value. Fair value of $319.93. However, Caterpillar's scale and record US $67.1 billion in recent annual revenues, along with rising power generation demand from data centers and AI, could support a stronger outcome than Bailey's models. Bailey's narrative leans on future earnings and a $319.93 fair value, but the current 36 to 36.1x PE tells a different story. That multiple sits below the estimated fair ratio of 59.3x, yet above both the U.S. machinery industry at 26.4 and peers at 25.2x. This points to a trade-off between quality and valuation risk. Is the premium price simply paying up for a stronger franchise, or is it stretching what earnings can reasonably support? If the mixed sentiment here leaves you on the fence, it can be helpful to act promptly and review the data yourself. I thought that article was kind of lame, if I'm being honest. So, Caterpillar sitting at $688.65. Somebody's got to build them damn data centers now. Who's it going to be? Probably Caterpillar. What do you guys think about Caterpillar? Is it overvalued? Is it undervalued? Let me know in the comments. The EPS of $18.81. That's pretty crazy. PE ratio of 36.2. Very interesting. Let me know what you guys think. Cool.